is the last down candle before the explosive up move for a bullish trend. And for a bearish trend, it's vice versa. It's the last up candle before the down move. Okay. And so what we can do is we can identify what those order blocks are. And you can use the top of the wick or you can use the body. It depends. Usually on the higher time frames, I use the top wick. But as you can see here, you got the last down candle before the explosive move. Okay, and then what happens is, so you get price goes up, comes back down, you get a reaction, and then you get an up move. So this is the daily chart. So technically speaking, if you are a swing trader or, you hold for a position, just 200 pips right there. That's 200 pips just off of if you were to just trade off the daily chart. Okay. Now, let's look for another example. Okay. So you have this last down move and then you have explosion to the upside. Okay. And that's how you really truly identify what an order block is. It has to be, it's not just any down candle. It's that last down candle before an explosive, expansive move away from it, like very quickly. And as soon, the order block is considered valid once you get above, once you close above that that highest point right here. So once you close above, it's a valid order block. Now, entry techniques, that's a different video, which I'll dive more into that in part 2. I just want to do a basic, very super easy video so that you can go and back test and identify these order blocks for yourself. In the next video, I'll show you how to actually enter and get those sniper entries and pretty much ride the institution's coattails. Okay, so you don't want to compete against them, you want to ride their coattails. And so let's find a bearish order block so that you can see that example. So um, so right here, okay, you have this last up candle, which is, like I said, this is the daily chart. So you have this last up candle before the move down. The very next day, price comes back, goes into it, and closes right at its opening. The next day, it pierces through it a little bit more, and then you see the move down. So if you were, just hypothetically, if you were to get into this particular trade, you're looking at, that's a 175 pip move. This is on a daily chart. So that was a bearish order block. Okay. And let's see, let's find even. So here goes another bullish order block. Last down candle for the explosive move up. The very next day comes back. You could have got in right there. You could have got in right here. And then boom, caught this for 240 pips. Easy money. Easy money. Okay. Now, when I discovered order blocks are considered, or at least what I would consider, the institution's support and resistance. Their definition of support and resistance. Okay, so that's exactly a good way to look at it. All right, and so let's see. Let's find a good solid bearish order. I've shown you bullish order blocks. I want to find you a really good. Okay, so all right, so this move, okay, didn't quite touch it. Let's see. So okay, so you have this bearish order block right here. Okay, so you have this last up move, right? You have this last up move before the explosive down move. Okay, and then price comes back a couple days later, hits it to a T, hits the body of that, and then boom, it shoots down. That is, let's see, sheesh, 300 pips, 290 pips. Like, come on, man. Like 290 pips. Like that's insane. You feel me? So let's see. Another situation, another bullish order block. We've been pretty bullish on the pound too, so that's why I'm seeing a lot. That's why I'm seeing a lot of bullish order blocks right now. But So you get the last down candle, price shoots through it, closes above it, comes back down. Boom! You could have entered right there. Even though this it's a black candle, it's a bearish candle. It closes bearish. You see that price action. You see that wick, and then boom! What happens? Price explodes to the upside. Price explodes to the upside. That is, oof, that's 550 pips in 2 weeks. If you're a swing trader, or if you're, you kind of long term, mid to long term type of trader, man, this is a phenomenal way to trade. And honestly, man, it is really. If there's anything close to the holy grail, it's as close as this. Now, order blocks can get very technical. You can get very advanced with it, and but we're gonna save the advanced stuff for a later time. I just want to show, like I said, I just want to show you guys how it works. Look at this move, okay? You've had this order block, okay? You have this order block, last up candle before the down move. Price moves down, shoots up, it gets through, and typically your stop loss placement is going to be above that order block. Okay, so I say anywhere from 10 to 20 pips above that order block to give you a safe stop loss. But look, boom, it hits it. It goes through it a little bit, and it explodes down. It's 1,000 pips in 10 days. In 10 days, man. So, start to recognize this. Start training your eyes to really see, to start to see these things, and it'll forever change your trading. And so this is just a daily chart. So if we go down to the hourly, let's see. Let's go down to the hourly and see what we can come up with. All right. And the lower you get on time frames, the more opportunities you're going to start to recognize. Okay. And let's see here. So boom. Okay, so you have this order block right here. And not all order blocks are created equal. So this one would have failed actually. This would have been a failed order block if your stop loss had been. I mean, it was still valid, but if your stop loss was right below this, then you would have potentially got stopped out. But like I said, me personally, I go wherever it is. So that's about 12 pips, and then I go about 10 pips more. So depending on your risk appetite, I mean, a 30 pip stop loss is totally fine for me. So for me, that would have totally worked out. But someone else would have if you're playing with the tight stop loss, then you probably would have got stopped out. But nonetheless, it still worked out, and this is on the hourly time frame. Okay. And let's see, let's try. Let's see here. So you got this last up candle right here. You got that last up candle. What happens? It goes down, explodes down, comes back up, and goes down. And that is pretty much order blocks in a nutshell. Okay. So I would definitely task you guys to go into your charts, go to whichever currency pair that you can, your favorite currency pair, go through every time frame, the weekly, the monthly, um, the daily, the hourly, 15 minute, the 5 minute, the 1 minute. You're gonna start to see a lot more order blocks. Now, granted, I wouldn't start taking trades right necessarily now, because there is a technique to actually using them. But as you can see here, I just wanted to help you identify them in this particular video. In the next video, Part two, I'm gonna dive a little bit deeper and a little bit more advanced on how to recognize the proper order blocks, okay, and give you those sniper entries. So stay tuned for that one, and happy trading, good luck, and make sure you guys like, comment, and subscribe. Talk to you soon.